India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Hello and welcome. You are with us on Bazaar Morning Call and we're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Surabhi Upadhyay. With me in the studios, as always, is Nigel D'Souza. Today we have Mangalam joining in as well. And guys, we finally have a new man on Mint Street. That's one of the major talking points that will sort of occupy our imagination today. But otherwise, things are not looking too bad on the global front either.
Things are not looking too bad on the global front either. Some, decline from the highs on Wall Street. That's pretty much warranted. But you speak about the new man on Mint Street. Let's take a moment and salute the old man as well. Shaktikanta Das. When he came in, everyone said that, everyone questioned his effectiveness, his capabilities and all of that. 6 years. He's gone through the pandemic. We've gone through multiple specific bank-related issues, a couple of wars, an interest rate cycle, and so much more, with nothing, but great. You don't only swim in troubled waters, you do extremely well out there as well. So that's telling you about, he was tested by fire time and again and came out like true gold. Not for any other reason has he been awarded, as the best central banker in the world multiple times.
Well, that's right. We thumb the table about the Indian equity markets and say that, well, India's done very, very well and we have, a better path ahead. I'll tell you what, in terms of central bankers, you hear some of those central bankers across the globe and you wonder, what they're going to do next year. A path was stated and he followed the path more often than not. So salute to Mr. Das. Thank you for the last many, many years. And now over to the next man in charge.
Absolutely. I'll remember Governor Das's smile. I'll always remember that smile and, may he continue to smile for many, many years in all kinds of, public roles that he will take on from here on. Such grit and such strong actions.
The beauty about...
but the smile, very gentle smile, but strong actions.
Incredible. What stands out in, RBI Governor Shaktikanta Das's tenure, and maybe Nigel would agree with this, Rahul Dravid as well. These are solid people. At the time things are going on, they're extremely strong, solid. Yeah. You remember them a lot more in their absence. Because, everyone will go out, hit sixes and all of that. And that's in the time when you miss someone who's just solid defense, blunting the ball. Yeah. It takes a lot of effort to make things look so effortless. So I'm waiting for, the time he writes his memoir about this period at some point in time. A lot of the RBI governors, prior governors, have written their memoirs. This will be something that I'll most definitely look forward to. The effortlessness with which he took so many efforts.
Made it look so easy when it wasn't that, we know that. By the way, there will be a press conference today at around 11:30 a.m. When Mr. Sanjay Malhotra takes over. He will be interacting with the press, so watch out for that. But we have a full market to trade and lots of other cues to go over as well. So let's kickstart things. Now, Wall Street had a bit of a tepid session. We had a mild red across the indices, about 0.5% lower. And it was a tech-related sell down that happened. And even in after hours, the futures right now are looking at a mild shade of red. And that's largely thanks to, again, some issues around tech stocks. So while we were trading, it was all about NVIDIA and whether China is starting some antitrust investigation there or not. Even the AMD stock actually went down yesterday. And in after hours, Oracle's numbers weren't that great. That stock's been trading lower, 6-7%. So therefore, continuing with some caution on Wall Street. But Asia is actually looking much, much better, starting with the Chinese market. In fact, if I look at the Hong Kong Hang Seng, let's pull up those markets on the screen if we can. Last time I checked the Hang Seng, it was rallying about 2% Yeah, that's still the case, 2%. The mainland Chinese market is also up and about. And, the Chinese market, is the Shanghai Composite, that is up about 1.7%. And why is that? Because of what happened in the last 1 hour as Hong Kong was closing out yesterday. So just to jog your memory, yesterday after the Politburo meeting, there was a formal communication. It was in Chinese and translated. It basically meant that, the country will now be pledging a more proactive fiscal policy approach and also a looser monetary policy approach. And we haven't heard that term looser monetary policy in China since 2011. So the market got really excited. And then there is another big economic meeting happening later this week, probably starts tomorrow. And that's where people are expecting more concrete, big stimulus announcements as well. So China is actually doing pretty well for itself. We've discussed the governor for a goodish bit, so I won't repeat that. But like I said, 11:30 is his first brush with the public at large and with media. So we'll watch out for the man. He is a 1990 IAS 1990 batch IAS officer, has been the revenue secretary. And, what scintillating credentials from IIT Kanpur. And then he went on to, I think, study public administration at Princeton. He has been at REC as a CMD. So, absolutely glittering career. And the fact that he's closer to tech, I mean, he's an engineer by sort of education, perhaps that will equip him really well to take on all the fintech challenges that we're in the midst of. Let's quickly move on, talk about fund flows. Yesterday, we had, foreign institutions on the buy side, but it was a smaller figure, about 700 crores. The bulls won't be complaining. Domestic institutions sold off, stock worth about 1,600 crores. Let's quickly come down to stocks. And of course, our team will tell you more about this. Tata Motors is hiking prices for some of its vehicles. Watch out for this one. Metropolis is more consolidation in the diagnostic space. They've gone ahead and picked up equity in another, healthcare provider. So look at this one. Life insurance data came out, and the picture is very simple, that private insurers have done really well, but the likes of LIC have suffered. So just for reference, HDFC Life, November premium up 13%, SBI Life, it's up 8%, ICICI, Pru has done even better. So we'll watch out for some of these insurance stocks as well. Plenty to keep us busy today, Nigel.
Well, that's right. Mangalam, you want to take,
Yeah, I'll just talk about the Wall Street and how our markets are likely to be in today's trading session. You spoke about some bit of profit taking overnight that we saw, about 0.5% decline from record highs. So key indices, you have the Dow Jones, the Nasdaq and the S&P 500. What will be more interesting is how these indices pan out in today's trading session, and the Nasdaq in particular. Why? Because yesterday, Nvidia was down about 2.6%. It's been a big mover, and the reason for that is the Chinese regulator is investigating the company over possible violations of an anti-monopoly law. So whether this, trouble is something that the company strides through is something we'll be watching out for. The second thing I'll be watching out for is how Oracle performs, because post-market, Oracle was down 7% as their quarterly results missed street expectations. So those are a couple of factors we'll be keeping an eye out on. From the macro standpoint, tomorrow will be the US November CPI data, where 0.3% or 2.7%, depending on whether you're looking at it month on month or year on year, inflation is expected. And this is the last major data point that comes in ahead of the Fed meet outcome on December 18th itself. Yesterday for our markets, while the broader markets did extremely well, the Nifty was, pretty much in line with the technical levels. The day's low on the Nifty, 24,580, absolutely in line with the 50-day moving average. The day's high at 24,705, in line with the 100-day moving average itself. But the story is actually in the broader markets. In the last 1 month itself, well, the Nifty is up 1.9%. We have the Nifty Bank up nearly 4%, mid-cap index up 5%. The small cap index is up 6%. And this is at an index level that we're talking about. Individual stocks doing a lot better. What's not doing well is FMCG. This month itself, the index is down 1.5%. GCPL did speak about subdued demand, rising input prices. So what it means is that could there be some pressure in the third quarter? Because there have been high expectations from this third quarter given festive season and the weakness that we saw in the second quarter already. They say that, good stocks either come at good news or good price. Godrej Consumer down 27% from its high, HUL down 21% from its high, Tata Consumer down 26% from its high. And these are only nifty FMCG stocks that we're talking about. Asian Paints down 30%, Britannia down 28%, Nestle down 20%. So just keep an eye out on them. Blue chips going through tough times, all of them down anywhere between 20 to 30% from their 52-week highs.
Well, that's right. It'll be interesting to see how that pans out, Mangalam. And yesterday as well, we had given it as the sector of the day on the downside, right, and it played out in that manner. Well, let's take stock of what the F&O markets did yesterday. The FIs, there was some lightening of positions. There were some shorts as well that were covered by closure on 2,000 contracts. And that's what you've seen in the last few sessions. So if you look at it, in terms of the short positioning, it's come down from around 1.2 lakh contracts or thereabouts. It's come down to roughly around 35,000 contracts. So they remain net short, but a lot of that short covering bounce has already taken place. You pull up the chart, that will tell you the picture. Moving to the option skews then, they've seen a fair bit of action on both the put as well as on the call side. And the PCR had moved to around 1.2, 1.25 odd. Now that's cooled back down. It's come back down to around 0.9. At around 1.3 odd, the sense you were getting was that the put writing was getting too easy. So now that's returning back to the median at around that 1, to 0.9. And that's because a couple of strikes were active. The 24,700 call, well, that was fairly active. 40 lakh shares getting added out there. The premium at around 100 rupees. And on the downside, you have the 24,600 put that was fairly active. The premium out there is roughly around 150 rupees, which brings us to the levels. The Nifty is now hovering around that 50 as well as the 100 DMA. Last two sessions, the Nifty has ended mildly lower in trade. Nothing really to worry. But if you're looking at a support zone, maybe, just maybe, today if you go closer around this range of the support zone, maybe we could see a bit of a bounce because that's where the first support zone comes in at. Then you're looking at the 24,000 odd mark. But this 24,450 to 24,500 becomes an important mark. Last week, we went and we tested the higher level. So that's the resistance zone that you're looking at, which incidentally comes in around the 100-day MA. The Nifty Bank as well, that, the number on the downside you're looking at is around 53,000. On the upside, the resistance mark, which we took a U-turn from here for the last week itself, was around 53,900. The sector that I'm looking at is metals. Yesterday as well, intraday towards the end of trade, you had a bit of a pop-up. There are two factors playing out here. One is there is hopes that, in fact, we'll see some kind of stimulus, or China is bracing for a better 2025, which will help demand in all probability. So that's one factor. The second factor is there is this buzz that some of these steel companies, they have rallied hard. They have put their request forth that we require some protection. Will there be something that we could hear about in the next couple of weeks? It seems the street is optimistic of hearing something. So that's why I'll keep an eye out on the metal index.
Okay, absolutely. Metals will be a place to watch given the high expectations that are riding again in terms of that Chinese stimulus. In fact, let's discuss that and more with our next guest. Andy Rothman, China strategist at Matthews Asia, is with us now. Andy, great to have you with us on the program this morning. And that's really the question, right? Now the Chinese are finally talking about looser monetary policy and unconventional countercyclical measures. What would you expect? We have this big meeting coming up later this week as well.
That's right. Great to be with you. Thank you. I think expectations are high, and I would caution people to maybe bring those expectations down a little bit in terms of timing. The language from the Politburo meeting a day ago was very constructive, as you said, talking about more stimulus, especially on the monetary policy side. But I think that what's more important than monetary policy, which is already quite loose, is the leadership of the Chinese government restoring confidence among Chinese entrepreneurs, because these small businesses are the people that employ 90% of the workforce, drive all the innovation and all the wealth creation in China, and they've really lost confidence. Consumer confidence as well is at rock bottom levels. So that needs to get turned around for monetary policy to work. Now, the language that we heard from the Politburo was quite constructive and forward-leaning, but I just came back from a week in China, and my conversations with officials there leads me to believe that we need to be patient. We're probably going to have to wait until March to actually see implementation of more stimulus.
Okay, all right. Hi, Andy. Good morning and good to see you in. So what about positioning then? The Chinese economy is clearly weak, and you're hinting that maybe, in fact, it's not collapsing. From an equity market perspective, there's been this toss-up between India as well as China. If you look at it in the last 3 years, well, we have gone all guns blazing and we're far outperforming that equity market. But in the last 3 months, because of these measures that you just spoke about that are taken on ground and because of the valuations, there is that bit of a shift towards China. So at current reckoning, what's your take? Which side would you be leaning towards?
Well, I agree that while the Chinese economy is a bit weak, it's far from collapsing. We can look, for example, at the first 10 months of this year, retail sales are up, of goods are up about 4%. Retail sales of services are up almost 7%. Electric vehicle sales are up about 50% year over year and account for almost half of all auto sales in China. So there are parts of the economy that are doing pretty well, but the market has really lagged behind. Earnings growth has been terrible. So what we're really waiting for is to see more stimulus, and especially, as I said, more rhetoric from the government to persuade private businesses in China, the overwhelming majority of businesses, that the regulatory environment in China, which has been really chaotic and untransparent the last few years, is going to be much better. And then we will see things come back, but probably not starting until around March.
In that case, would you bet on India?
I'm kind of boring. I just focus on China, so I won't be able to make a comparison between one or the other. And I also don't think that China and India are a zero-sum game. There's plenty of room for both. Maybe the biggest contrast between the two is simply valuations. Valuations in India, as you know, have gotten quite expensive, whereas in China, they're still quite cheap right now.
Sure. No, absolutely. I mean, China does have that on its side. very attractive valuations. But, Andy, what will it take for the market's interest to sustain in China? We've had a lot of false starts since September, right? It's sort of, stop and start, and then it's not sustaining because the market's not satisfied with the kind of announcements and the kind of measures that are coming out. So what kind of actual policy measures will keep the bulls' interest intact? And also talk to us a little about the whole tariff war situation, right? And it's really playing out. Look at this. I mean, the headlines are full of it that now China wants to investigate NVIDIA for antitrust. And then, Mr. Trump is promising higher tariffs come January. So how does that play into the fact that we're getting these policy announcements perhaps this week and how you're summing up the economy there?
Lots going on right now in China and between Washington and Beijing.
Yeah.
I think for markets, the most important elements are going to be, does the Chinese leadership do enough to get confidence back among consumers and entrepreneurs? That will lead companies to start hiring again, start investing. You'll start to see stronger wage growth. You'll start to see earnings improve. And with valuations relatively low, that's what's necessary to get investors back interested again. The U.S.-China part's interesting as well because, frankly, we just don't know what Donald Trump is going to do when he takes office in a few weeks. It's possible that Donald Trump himself isn't sure what he's going to do. When we listen to him talk about tariffs, he goes in many different directions, sometimes in the same interview. Sometimes he talks about tariffs as a negotiating tool. Sometimes he talks about using tariffs to achieve a specific objective with respect to drugs or immigration. Other times he talks about just bringing a lot of money so he can reduce personal income tax in the United States. So we're not sure what he's going to do. But when I was in China last week, the point I made to my contacts in the government there is spend less time worrying about Donald Trump. Spend more time getting your own house in order, because the biggest part of the Chinese economy, the driver of jobs and wealth and innovation, is domestic demand. And if they can fix that, then dealing with Donald Trump becomes much easier.
Absolutely. That's probably a great prescription for the policymakers out there. Let's see sort of how they look at it. Stimulate demand, domestic demand. That's been the biggest ask for China. Thank you very much for joining us, Andy, and we hope to hear more from you as some of these US-China parlays continue to roll out as well. Thanks for joining in today. Well, with that, we move on quickly. Let's tell you what's lined up on the show today. Coming up at 8:35, we have Bino Pathiparampalli of Elara Securities to talk about the impact of the exclusion of the Biosecure Act from key U.S. defense bill on CDMO stocks. At 9 a.m., we'll be joined by the management of Borosil Renewables as anti-dumping duties get introduced on solar glass imports that are coming into India. At 9:20, we have Yogesh Patil of LIC MF. He's our market master of the day. At 9:30, we turn to the RBI Full Tilt. Aseem Dhruv of SBFC Finance and AK Bhattacharya of Business Standard will be talking to us about the new appointment with Mr. Sanjay Malhotra, all set to take charge as the new RBI governor. After that, we'll be in conversation with Patanjali Foods. Sanjeev Asthana is going to be joining in to talk about the business outlook in the second half. And at about 9:55, we'll have Ramdev Agarwal of Motilal Oswal Financial Services. He joins in as Motilal Oswal rolls out its 29th annual wealth creation study. Finally, towards the end of the show, today Lata in her Market Masters segment is going to be in conversation with Bhanu Baveja of UBS Investment Bank. Welcome back. Well, Asian markets have been largely holding up positive thanks to the excitement around China. There you go. Implied open is suggesting that we'll start maybe 20 points higher. Right now, it's time to boil it down to stocks, and our team is standing by with the CNBC-TV18 list of top stocks to watch. Guys, hi, morning to all of you. Let's start first with the news coming in on Syngene. Abhishek, what are you picking up?
Well, sources tell CNBC-TV18 that there is a book which has been launched in Syngene, which is a block. So the seller is Biocon Limited. Indicative price is about 825 per share, which is at a discount of 5.7% to yesterday's closing price. Now, the offer size is about 2% of the equity, or in quantum, it is about 660 crores. So for residual stake, there is a lockup of 60 days post this stake sale that the seller cannot seller cannot sell their stake. The sole BRLM is Kotak Securities. Biocon's holding post this stake sale will be about 52.5% in the company. Back to you.
Right, Abhishek. Thanks a lot for that. Well, let's hop across to Vinny, who's here to tell us about Metropolis. Hi, Vinny. Morning. Looks like a rather good acquisition they've made.
Absolutely, a good acquisition coming in for Metropolis. Now, they have acquired 100% stake in Core Diagnostics. Total consideration is going to be 247 crores approximately. 45% is going to be through equity swap, and 55% they will be paying and funded by cash. Now, do not forget, 60 days is what is the time period they will be completing this transaction in. Why is it positive? Because this gives them a lot of synergies. One, in terms of financials, it is going to be EPS accretive starting from the first year itself, FY26. Return ratio, so return on capital employed, return on equity. Yes, marginally in FY26, that may see a fall. FY27, it will come to those Metropolis Healthcare levels, the combined entity. And then in FY28, it will start become accretive from those years for return on capital employed as well as return on equity. Even in terms of operating metrics, if you look at that as well, Core Diagnostics operates at around an average revenue per test of around 2,300 rupees per share, which is 2,300 rupees per test, which is 4 times higher than Metropolis. So keeping an eye out on their volumes are quite high. They are in the north and east regions. So that gives synergy to overall in terms for Metropolis in that region. They specialize in oncology tests as well. So drug tests, cancer drug tests, as well as, for cancer patients, the tests are quite high. And that gives a lot of opportunity to Metropolis Healthcare. And that is why a big positive there and expecting green here.
Take that point, specialty contribution of 85% versus Metropolis's own 37% is something that will increase their overall value mix as well. Let's go across to Vivek now. Vivek, IRB Infra and BEL, both you're watching today.
Good morning. That's right. So IRB Infra, the company has given the operational update as far as toll collections are concerned for the company as well as the private InvIT that the company has. So as far as the month of November is concerned, total collections is up almost 23% on a year-on-year basis at 536 crore. Along with that, the company has also given a positive commentary as far as the month of December is concerned. They expect the upward trajectory as far as toll collections are concerned to continue. They expect toll as well as traffic to increase, driven by year-end festive as well as holiday season traffic that they're anticipating. Now, coming to Bharat Electronics, some strong order wins coming in over there. Fresh orders worth almost 630 crore rupees. Major orders include the maintenance of the Akash missile system and a whole host of other orders too that has come in. Now, remember, FY25 order inflow as far as Bharat Electronics is concerned is over 8,800 crores. So expecting a green on both of these stocks today.
Okay, all right. Thanks a lot for that, Vivek. Well, I'm keeping an eye out on JSW Steel, and as I mentioned earlier, on most of the steel companies, because there is that hope that the government will come up with some action to protect them from all the dumping that we've seen of imports coming in from China, steel imports into India. But for today, we're looking at it because their November crude production numbers came in, and not too bad. Production number up by close to around 5%, so that's pretty good. They're also saying the capacity utilization levels for the India business was at around 94%. So the street will like that, and they'll also pin their hopes to hear in from the government with regard to that protection. So going with green on JSW Steel. Let's hop across to Yash. He's here to tell us about the insurance companies because the monthly business updates have started coming in. Yash, take it away.
Well, Nigel, let's start with the stronger side. Very, very strong growth coming in for ICICI Prudential Life Insurance. And interestingly, that strong growth comes over a favorable base. November premium was up 1.5 times. The total annualized premium equivalent in the month of November was up 2.7 times. And retail AP, that saw a growth of about 28%. Max Life Insurance also saw strong numbers. That was on a decent base which it had. November premium growing at 21%, total AP at 25%, retail AP at 25%. Now the weakness overpowers the strength here. Three companies with weak numbers. The first one, LIC, the weak growth has come on a favorable base. November premium has dropped by about 27%. SBI Life Insurance, weak growth again on a favorable base. November premium just growing at about 8%. And finally, HDFC Life, weak growth on a favorable base. Again, November premium just growing at about 13%.
Okay, all right. We'll watch out for all of these insurance stocks. Yash, thank you very much for that. Let's quickly recap the list for this morning. Stocks that have positive news flow around them are Syngene, JSW Steel, Metropolis Healthcare, IRB Infra, BEL, Max Financial Services, as well as ICICI Prudential Life. Let's get them up. Yeah, there you go. So that's the list of positive stocks. The ones that have negative news flow, HDFC Life, SBI Life, and LIC.
A short break, come back. On the other side, we will connect with Hemang Jani for some fundamental stock talk and analysis. Stay tuned.
Welcome back. Hope you're having a good morning. Well, we've listed all the top stocks that we're tracking for you. So let's get down to some fundamental analysis. Hemang Jani joins us on the show. Hi, Hemang. Good morning and good to see you. Well, Hemang, I wanted to ask you about Metropolis. Vinny just told us about their acquisition that they've done. It appears it's in a vertical that they're not very, very strong. The geography as well is new, and it will add, I think, roughly around 8 to 10% in terms of revenues. What's your view on the stock? It ended at the high point of the day as well yesterday. Your take?
Good morning, Nigel, and thanks for having me. Yes, I think the Metropolis acquisition of Core Diagnostics is surely a big positive for the company because it will strengthen its cancer capabilities and the footprint in the North and the East India. And it will add to almost about 8 to 9% of the Metropolis sales. And the deal size also is fairly reasonable at about 2.2 times FY24 sales. Overall, we think that this will be EPS accretive, and more importantly, because of the kind of offering that it will be able to, introduce, there is going to be a, good amount of earning upgrades that one can see. So overall, a positive view on Metropolis on the back of this development.
Right, Hemang, we speak about Metropolis, we speak about the pharmaceutical space itself. We'll talk about it in just a bit. We'll probably go across to Winnie and she'll tell us about Glenmark too. But apart from that, I wanted your thoughts on the way consumption is likely to behave in the next couple of quarters. Do you think it's keep away from FMCG until you see signs of recovery, or maybe buy this dip that you're seeing? Stocks, blue chips available between 25 to 30% discount from their 52-week highs.
Good morning, Mangalam. I do think that the stocks have corrected because of the way things panned out in Q2, and the start of this review has not been that great, with Godrej Consumer telling you that there is going to be an issue in terms of both volume growth and margins. So we need to watch and see how this whole space pans out, and is it a company specific issue, or we are going to see a broader concern when it comes to the entire category. What we do think is that certain categories, let's say, for example, Britannia, or certain products that Tata Consumer is offering, the pressure is not that high. This is confined to certain pockets only. But we would definitely avoid, buying into any of these stocks till we see, very specific signs of revival in the consumption as far as FMCG is concerned.
Okay. Yeah, I mean, and take Mangalam's point on valuations coming down, but then if you're just not seeing any kind of, stable growth outlook, I guess then it becomes difficult for people to buy in. Anyway, to talk about another sector where we have a lot of data to go over, it's insurance. The life insurance trends are in. LIC hasn't done that well. The private insurers and insurers have done a bit better. Hemang, do you like anything here? Because there's still a lot of regulatory uncertainty. You can wake up any morning with something new on the regulation front.
Yeah, I do think, Survi, that there has been certain regulatory developments, and also in terms of the surrender value, related changes have not been that positive for the sector. But I do think that as far as the distribution related, developments are there, it will take some time. I don't see that come through in a hurry. And in the meantime, if you look at the overall operating parameters, most of the insurance companies are doing well when it comes to their annualized premium equivalent and many other operating parameters. So from a stable, 14-15% kind of a CAGR growth theme, this does look good. Within the pack, if you really want to avoid this regulatory overhangs, I think policy Bazaar looks like a very good, bet, because it would not have all these issues, plus being a platform company, and that theme is in the limelight. So I do like that as a space, but HDFC Life is one of our top picks at this point when it comes to insurance.
Okay, got it. All right. Request you to stay with us, Hemang. Vinny is joining in to tell us about another company, that's Glenmark. We had some news on the exchanges just around 30 minutes or so ago. Vinny, fill us in with the news.
So absolutely, Glenmark is something that we're keeping an eye out on. Now, positive update that has come in for one of their clinical trials. That is, Ichnos Glenmark Innovation has presented a positive clinical data for a phase 1 study of ISB 2001, which is a drug that they're working on for treatment of cancer. This is a multiple myeloma for multiple myeloma patients. That is a blood cancer treatment. So this is a very important one. Even though it's a phase 1 trial, there are only 20 patients which have been tested. Clinical data normally is more important ones, and especially for the the oncology side and cancer treatment side, it becomes an important drug. The company has been talking a lot about this one as well. They're quite bullish on this segment, and that is why an important update on that front. The data has overall a very high response rate, durable response, as well as a favorable safety profile also has come in this phase 1 trial that they've finished. 83% is the overall rate of response rate that we're seeing. So very good response rate coming in for this clinical phase 1 trial, an important drug, and that is why Glenmark is going to be in focus.
All right, we take that point, Vinny. Thanks a lot for that. And while this adds to their overall business as well, the important part is that Ichnos is something that the company has not ruled out selling stake in or a partnership in the past as well. So if this increases the valuation out there because of this, then maybe you could see some accretion there too. But for the pharmaceutical pack, which was under pressure yesterday because of the US Biosecure Act being taken out of the defense, let's go across to Bino Pantaparambil, who joins in from Ilara. Bino, what was, there was a fair amount of optimism around, the opportunity that the Biosecure Act would bring about. But now, it's being taken out, there is some pessimism. But do you think that is unwarranted because it may be back in some form or the other under some other head?
Yeah, the Biosecure Act, as I understand, is not completely out. It may still come, but I think it would see some delays. The current Congress is winding up. A new Congress has to come in early next year. Before that, if the act goes through in some form or the shape, it can be a positive. But if it doesn't get through this Congress, then the whole process may have to start again altogether, which means a delay of at least 12 months in my estimate. And possibly the shape of the law can also change with some provisions diluted, etc. So all these add to the uncertainties of the sector, which has already priced in a significant benefit coming from the Act. So as of now, it is not completely gone, but we should expect some delays and some dilution in provisions.
So could you give us a bit of a scenario analysis? If it does get passed in its current state and form, what is the kind of benefit in terms of an upside? If it doesn't, then what's the kind of downside? And at the same time, if it does get passed with some sort of riders, what are those important riders that you're looking at? What is it that moves the needle the most?
So the Chinese companies, the large Chinese CDMO players, especially the WuXi group of companies, they are probably twice or thrice the size of Indian CDMO players all put together. That is the scale at which China operates in the CDMO market for the US large companies. If that business entirely shifts to India, it can be a big game changer. There will be a huge demand. We could see growth picking up for the entire CDMO companies and pricing also improving. But if that is not happening in a full way, if there are dilutions in the way the litigation is, the legislation is going to happen, then possibly the entire benefit may not come through. To what extent it comes and how it comes and over what period it comes is something which we will need to see when the fine print of the final legislation comes through. But whether it will justify the already run up share prices, which are already pricing in significant benefits coming from it, all that are things which we need to see as the final legislation takes place.
For the benefit of our viewers, if you're wondering, we constantly go on and on about the CDMO. What are we talking about? It's contract drug manufacturers, which is seen as a big opportunity now for Indian pharma. It used to be contract research and manufacturing. Now it's actual drug manufacturing that we're talking about here. You know, that's really my question. Now, I mean, purely from an investor's perspective, if you want to have some pharma in your portfolio, should you look at these CDMO plays and hope for that opportunity to materialize? Or would you would rather go with some of the, the large generic players like a Sun Pharma, Dr. Reddy, some of the larger companies? What would your preference be and why?
From a pure valuation perspective on the current business, the general pharma companies look more attractive and cheap at this moment. The pharma companies have corrected a bit over the last 2 months in the market sell-off. That has made the valuations even more attractive. But at the same time, there is still strong momentum in the CDMO companies. A lot of that is the narrative around growth picking up in a big way over the next 3-4 years. Whether that narrative plays out completely and results in such a J-curve takeoff in the growth and further upside to the stock prices is something which we will come to know for sure only 3 to 4 years from now. But till then, the momentum is likely to continue based on narratives around the Biosecure Act. But from a pure valuation and value play, the general pharma companies, including Dr. Reddy's, Zydus Life, Sun Pharma, etc., look much more attractive.
All right, and just a couple of questions on two specific stocks. I'm not sure whether you track them or not. One is Glenmark. Vinny just did tell us about the Ichnos business of theirs getting clinical data from the first phase of tri-specific treat antibody. What does that do in their overall scheme of things? And the second one was on granules because of the US FDA issues at their Gagillapur unit on both those stocks.
Sure. The Glenmark phase 1 data for the antibody drug, which they just released, seems promising. In an area of high unmet medical need, this drug is showing some certain promise. This is still early phase 1 data, but being an oncology drug, we also get a sense of the efficacy of the drug in the phase 1 itself. And as of now, it looks promising. It has to proceed further into further phase 2 studies and then phase 3 studies before we will get a full understanding of its potential. But at this stage, it does look very promising. And coming to granules, as you just mentioned, there have been issues at their major plant, which exports to the US, manufacturing quality issues. The company is trying to address those issues actively. The US FDA has already put the plant on OAI status. What action the US FDA will take is still awaited. A warning letter or an import alert are possibilities. A warning letter looks more of a possibility as of now, but we will have to wait for the US FDA to come back to us on that.
All right, just before we let you go, a quick one. Have you ascribed any valuation to the Ichnos business of Glenmark? Because they haven't ruled out a stake sale possibility or a partnership possibility in the near future.
I'm sorry, not really. We don't cover that.
Okay. All right, Bino, no issues. Thank you very much for all the perspective that you've provided this morning. Quite helpful. Appreciate you joining in. Okay, so we've got the first comments coming in from the new RBI governor saying heartfelt thanks to the finance minister, I think. Will demit office, says RBI governor. Okay, this is the present RBI governor. This is Mr. Shaktikanta Das. He's saying that he's immensely grateful to the Prime Minister for the opportunity that he has been given. And, maybe I'm not sure if that 11:30 press conference, maybe we'll have the outgoing governor along with the incoming governor. And that's the new man in, absolutely. So all eyes are going to be on Sanjay Malhotra now as he takes on that job at a very, very interesting time when the economy is at crossroads, with inflation continuing to be, quite persistent and sticky, and with growth worries leading the market to believe that the rate cut cycle should start at some point next year. So interesting times for him to come in and take office. But at the same time, of course, touch wood, we're not in the midst of any sort of an economic crisis at all. So it's a fairly stable environment in that sense. So we'll talk more about this as we go forward. Full throttle discussion, by the way, on this coming up at 9:30 a.m. Hemang is still with us. Hemang, actually, since we're talking RBI, let me ask you about financials. Now, because of the CRR cut anticipation, the last week was fantastic for banking stocks, right? I mean, positions were taken ahead of the event, and then the event also transpired. But now what? What are you buying in financials? Any fresh ideas? Anything additional?
I think it's been one of the better performing sectors, both operationally Q2 and in terms of the index, because Bank Nifty has been an outlier over the last about, 4 to 6 months. And given the fact that still many people are underweight and the fact that some of the private banks as well as PSU banks, the overall growth outlook seems quite good, 13-14% kind of a loan growth, stable margins. So we do like, SBI, Axis Bank, ICICI Bank at this point of time. And we do think that, some of the NBFC pockets which have gone through a lot of stress, I think we would avoid, particularly microfinance related companies. We don't know how deep that issue is, and we are surely avoiding. Instead of that, we would be going with something like Chola, which is corrected about 6-7%. And some of the gold financials, because the gold price again is showing a lot of strength. So Muthoot Finance is something that we would prefer at this point.
Got it. All right. A final question before we let you go, Hemang. What about the metal space? There have been select stocks in there that you've liked. Now the hope is that Chinese, they go ahead and stimulate their economy. And on the domestic front, the government of India gives the domestic steel industry some kind of protection. What do you like from the space?
Nigel, we do think that there is a case for some more up move as far as metal companies are concerned, because the data points in the domestic market and the fact that China-related developments would have some positive rub-off. What we like at this point of time is JSW Steel, Tata Steel, some of the pellet companies, Godavari Power, because the iron ore price and the spreads as far as pellets are concerned are slightly better. So I do think that as a tactical opportunity, metal companies would give you maybe 5, 10, 12% kind of an uptick.
All right. Thanks a lot for that, Hemang. With that, what we'll do is we'll step into a short break. And as we do that, let's tell you a little about... All right, Nigel, you have to take it away, I guess.
That's right. I think we'll slip into that short break. But let me present to you the Growth Code, a collaboration initiative by Grow and CNBC-TV18. Our mission is to equip you with valuable insights and strategies to navigate the markets and make informed investment decisions. Today, we'll help you understand if you should be trading in cheap, out-of-the-money options.
Don't trade out-of-the-money options just because they're cheap. Traders often get tempted by out-of-the-money options, lured by the possibility of turning small bets into massive profits. But what's the reality here? Out-of-money options are cheap for a reason, because they're based on outcomes that are less likely to happen. For instance, if a stock is trading at 100 rupees, an out-of-money call with a strike price of 120 rupees is inexpensive, because the chances of that stock reaching that 120 rupee mark before expiry are slim. The real challenge for those who are buying this option is time decay. As expiration approaches, out-of-money options lose their value rapidly. Each passing day without significant movement towards the strike price erodes the wealth of those who've bought that option. In essence, buying out-of-money options is a high-risk, low-probability situation. Other side is that selling these out-of-money options. If you go ahead and sell them, when you make money, it will be a limited amount that you would make, just that premium. But were there be a situation when the stock price actually crosses that 120 rupee mark, the losses that you would have would be massive. So the potential rewards, while they may seem enticing, the odds in out-of-money options are stacked against you.
Welcome back. You're tuned in to Bazaar Morning Call. As promised, let's get in our technical guests. We have Mitesh as well as Sudarshan who join us on the show. Good morning, gentlemen, and thanks a lot for joining in. Well, Mitesh, you go first. In the last couple of days, we've seen some kind of consolidation with a bit of a negative bias, though we continue to hold above the 24,500 mark. For today, what's the cue you're looking at on the index first?
So on the index, Nigel, I've maintained a view that we might actually consolidate after a good pullback from lower levels. The hourly indicators look tired, slightly overbought as well. So the range for me would be possibly, and you can give and take 50 points here and there, 24,500 to about 24,800. So the buying zone comes towards the lower end of the range. Yesterday we did get some decline, but today we might open gap up and cover a good part of the decline. So we might still be chopping within the range, but yeah, closer to 24,550, 530, I would look for buying opportunities, and around 24,800 is where I would want to exit the index.
All right. And Sudarshan, would you echo that sentiment?
Well, we all have different views. First of all, I think the markets are in a clear uptrend. We have broken out of a very reasonable correction, and the chances are, and we are in a seasonally bullish period. So in a clear uptrend, the markets don't have to go up every day. I mean, it's not a circus. They don't have to perform. The markets have done their bit last week. Now they are likely to consolidate. That consolidation is a natural process every time a market rallies. Now, the problem is that we can't say when this consolidation will end, today at 10 o'clock or next week or next week. We don't know that. So within the consolidation, it's best to stay with your existing long positions. There are two ways in which you can build on your long positions, and you should have long trades in the Nifty. First is if there is a dip towards 24,500, then you buy. And the second is if the dip doesn't come, but if the Nifty decides to break out above 24,750, which is the upper level of the resistance or the trading zone, then you buy that breakout. Within this 200-point range, 250-point range, 500 to 750, there is no trade. So be patient. Wait for a dip, wait for a breakout, otherwise do nothing.
Got it. All right. Let's get to individual stocks. And Sudarshan, what are you looking at?
Well, there are a lot of mid caps, which are giving very attractive, patterns. All of them are suggesting the corrections are over and they are willing to go higher. Bajaj Finance, buy with a stop under 6,800. And since the patterns are the same, I'm not describing them separately. Dr. Reddy's, buy with a stop under 1,240. Lal PathLab, buy with a stop under 3,000. And finally, Voltas, buy with a stop under 1,710.
And Mitesh, your stock picks?
Yeah. On the stock side, I have all buy calls today. Lal PathLab is a buy for me with a stop at 3,100 for targets of 3,200 plus. Geo Financial is a buy with a stop at 330 for targets of 350. Also a buy on Concord. Look at targets of 885 here, use a stop at about 843. And the final buy calls on DMart, which is a buy with a stop below 3798, broadly below 3800, and look for a target of 3880.
Okay, all right, gentlemen, stay on. We will come back to you for some more ideas around market opening. Take a break right now, and when we come back, we'll have the pre-opening rates. Also, we'll get chatting with the management of Borosil Renewables. That anti-dumping duty for solar glass has finally come through. So now what does it mean for business? Welcome back. You're with us on Open Exchange, and we're coming to you live from the CNBC-TV18 Motilal Oswal studios. The next company that we're putting the spotlight on is Borosil Renewables. And you would remember, because we were chatting with the management just a couple of weeks back, talking about the need for more protectionist measures that India should perhaps take to deal with the dumping of solar glass that's happening in India from China and Vietnam. Well, guess what? Those measures have been announced by the government now, but are they enough? That's exactly what we want to understand. And we have Mr. Pradeep Kheruka, Executive Chairman at Borosil Renewables, joining in. Good morning, sir. Great to have you back on. So we want to keep it very simple to understand what has been announced and to what extent it helps. I believe the value of imported glass is to be now kept at a floor price of $677 per metric ton. Tell us if this is the right interpretation, and to what extent does it help you?
Thank you for having me. Yes, you're right. It is a floor price of $677 per ton. By and large, there's a little bit of variation depending upon which company is doing the export. But in principle, that is around the range coming from China. If it's coming from Vietnam, the price is a little more than $100 less in terms of the floor price. And I would say that this would go a long way in helping us to stabilize industry growth in India. I must say the government has been very proactive. It's been very sensitive, and the government has exhibited a great intent, resolve to ensure that domestic manufacturing in India is supported and grows rapidly. So this is definitely going to be helping the industry to grow.
All right. Hi, good morning, Mr. Kheruka. You asked for it, you have been rallying for it, and now you have got it. So that's good news. So tell us, how does business shape up? First, if you could tell us, out of the total solar glass that's consumed on a daily basis, how much of it is imported? I think it was some 30-40% approximately. You could give us the number out there. So that could come down. And domestically, can you go ahead and increase the solar glass price now, which in turn will help your margins?
So to answer your first question, the demand for solar glass has escalated rapidly. And right now, domestic production has been supplying about 30-40% of the demand. It is true that a lot of glass was lying in domestic manufacturers' warehouses, unable to sell because of cheap imports. And I believe that this duty is going to help domestic manufacturers be able to sell all that they produce. Even after that, there's going to be a big enough demand. And that is going to spur domestic industry to expand capacity. I just want to remind everybody that in the last time that anti-dumping was imposed in 2017, India had a capacity of 1 gigawatt of solar power, which means we had enough glass to manufacture solar modules worth 1 gigawatt annually. And within 5 years, this swelled up to 17 gigawatts annually. So the domestic industry and domestic entrepreneurs are not they're not going to be waiting around. The moment this has been announced, I believe that we're going to see a lot of money going back into production capacity. So that is one. And secondly, of course, this is going to be a big shot in the arm for existing businesses. There's no question about that.
That still doesn't answer our questions, right? Because if you could tell us what the current domestic price is with this anti-dumping duty, how much will you increase the domestic price by? And the inventory that you spoke about, companies were sitting on, how will they liquidate it at what prices?
The liquidation of the inventory is not a problem at all. We were selling at way below cost, and I think the prices will see some kind of a correction. We haven't yet decided what the new prices will be, but they will be they'll be better than what we were selling at, but it would still be below the cost of imported glass. I must point out that the cost of imported glass has already taken hold with effect from the 4th of December. All glass that is being cleared at much higher prices than even the prices that we propose to sell.
Right. No, you said that you are selling below cost. So just wanted to understand, what is your cost price and now how much above cost price will you be selling, and what does that do to your operational performance?
We are going to be approaching this cautiously. We are in no hurry to match imported prices at this moment. I'm talking about domestic industry as a whole. And we are looking at being responsible about it. We realize that some of our customers have booked orders at prices which have taken into account the old prices. And so we will not do anything to jeopardize their sales, their business. So we're going to be approaching this cautiously. But yes, over a period of time, prices will certainly firm up. And we'll have to wait and see exactly what levels they come up to, whether they match the import price or they remain a bit lower. That remains to be seen.
Okay. Mr. Kheruka, for your business, the consolidated numbers, now that this protection measure has come in, when do you go back to profits? Because at the consolidated level, I think there was a loss both at the PAT and at the EBITDA level. So when do you go back to profits? And now what is the sustainable run rate of margins that we can expect? I mean, I know that you're taking your time to decide on the immediate pricing action, but tell us, I mean, now that there is protection in place, what is the margin at which your business will operate?
Yeah, I cannot give any numbers on margins. That's not possible. But yeah, the margins will definitely improve. There's no question about that. And that's a factor of the prices. See, we are already manufacturing at pretty much flat out production in our company, and so therefore now it's an improvement in margins will come from higher prices. So
what's the aspiration, sir? I mean, I understand you can't give a number. That'll be a function of how much of a price increase you can take. But I mean, do you see the business going back to double digits? What are the timelines? And again, on profitability, by when does this settle? By when do you get back to full profits at the consolidated level as well?
See, at the standalone level, we should be back in profits in the next few weeks, I hope. And at the consolidated level, it all depends upon the German asset that we have. We are in some distress over there, in the sense that after the elections have been announced in Germany, there is no new measure coming out, and the markets there are still in disarray. So we are waiting and seeing how it turns out. So we have some exposure there, and we'll have to see how this evolves. But standalone, which is much bigger, we are doing 1,000 tons here, it's just 350 tons there. So if we are strong here, then it should be able to take care of whatever is going on in Germany.
All right, Mr. Kheruka, let's focus on the domestic business itself. And I'm looking at the margins. Maybe 2 years ago, your margins were 30-35% as well. Then they came down to almost 5%. But in the last few quarters, gradually improving. So that's good. Fair to assume, you don't give us a number, but margins will improve, right, from what you did in the last quarter, which was around 18% for the standalone business.
Yes, certainly.
So could we assume by quarter 4, once everything takes shape, it should be maybe in the mid-20s? That could be an aspiration of margins?
Aspirationally, yes.
Okay, all right, got that out of the way. And also, since whatever you produce now will be sold, there's going to be a fair bit of demand as well, and there's that import substitution. So what about the next capacity addition that you're looking at, and at what capex will it come at?
So the next capacity addition, well, to be very honest with you, we've already started discussing it. However, as you are aware, that we need board approval to begin with. I mean, in principle, we already have board approval, and we have announced it to the stock exchanges, but this was on hold. So we are reviewing the hold, and we're just examining the kind of steps we need to take to ramp up capacity, and whether it'll be pockets of existing furnaces that we have, replicating those, or one very large furnace. We might go in for a situation where we'll replicate existing furnaces which are tried and tested, and the costs are well known and well understood, and probably more economic than going for a completely new design.
So what is the current capacity that you have, and what do you think you'll be adding on in terms of capacity? And if you could give us a ballpark number, if you're adding X amount of capacity, at what capex could it come about? Very, very rough numbers, a bit of a range as well. Capacity addition and capex at which it could come at.
I cannot say what capacity we will add. I can merely say what we are discussing, because all this will be firmed up. Yeah, we are discussing perhaps another 500 tons right now.
All right, you'll add another 500 tons. And typically, the prices that there are right now, I mean, you said that you won't take any price increase immediately. You'll be very moderate in that. Currently, the imports were close to around 28,000 rupees per ton. 56,000 per ton is what the government has indicated in terms of an anti-dumping duty. What are the prevailing prices in the market right now? How much of your capacity is locked at a certain price? And over, say, 2 to 3 years, how close would you get to this 56,000? Let's put it that way.
See, we typically sell about a month in advance. So
Okay.
December sold already. And so the price correction will start happening in sales from January, I think. Maybe some in December, the balance in January. And then it'll go on. I think by the end of March, we should be at a price which is stable and acceptable for us.
Which is closer to the $677 per ton.
This is something that you see. We work together with the consumers, and we will be in dialogue with them, and then we will see. We have no desire to make anything onerous for our consumers. We're very responsible in that way.
All right, we take that point.
All right, Mr. Kheruka, we'll leave it on that note. Thank you very much for joining in. Finally, some good news coming in for your industry, and hopefully in the subsequent quarters, we'll get more clarity on the pricing actions as well. That's Borosil Renewables, stock in focus on the green side. Now let's get back to the market and check the pre-open and see where it has finally settled. So you've got about a 30-point up move on the Nifty. The mid-cap is quite flat. The mid-cap index is 0.1% higher, so not too much traction. And the bank Nifty is also fairly quiet at this point in time. Just checking if there are any major movers on the Nifty. Maybe the steel names because of, the output numbers that Nigel was talking about, plus the fact that there's anticipation on this Chinese stimulus all over again. So other than that, there's not much movement on the large caps.
I think Metropolis as well is up close to around 2%. That acquisition looks pretty good. In the next 60 minutes or so, we'll try to get in the management to clarify with regard to how do they see this business ramping up. Keep in mind, the stock ended at the high point of the day and still it's building on 2%. So it tells you that they're looking at the news fairly positively. Let's get in Sudarshan back on the show. He's here to give us his 9-10 call. Sudarshan?
Well, consider buying Voltas with a stop under 1710.
Okay, all right. Thanks for that, Sudarshan. Mitesh, what about you?
I'll go with a buy on Dr. Lal Path for targets of 3,200.
All right, that's the view coming in on individual stocks, the 9-10 views. We're talking about, pre-open rates. Just keep an eye out on Swiggy. Swiggy's been doing extremely well ever since open. And the pre-open as well, the stock is up around 4.5 odd %. This morning, there is a note that has come in from CLSA. They've initiated coverage on the stock with a buy rating, and their target price is 708 rupees. Remember, when Swiggy came out with its IPO about a month ago, it was close to around 390 rupees, what the issue price was. And now CLSA believes that the target price for the company is 708. Why is that? Because the company is riding the quick commerce highway. Indian quick commerce industry itself will become 6x from FY24 to FY27, and Swiggy will be one of its largest beneficiaries. They see the company's execution improving with accelerating growth and improving profitability. What is it that CLSA expects? On quick commerce itself, they expect a GOV compounding at 67%, and higher take rates would mean that the adjusted revenue for their quick commerce business compounds at 78% for the next 5 financial years. So just keep an eye out on that. That's something we'll watch out for. And on an overall basis, FY27, they expect the company's revenues around 26,000 crores, an EBITDA break-even, EBITDA of 2,000 crores, and net profit of close to around 1,842 crores itself. The most important part when you look at Swiggy is the valuation with Zomato. Remember when the company came out with an IPO, we here at CNBC-TV18 had said that the valuation discount is 60%, and what price the discount settles at is something that we'll be looking at. CLSA values Swiggy at a 22% discount to Zomato itself. So that's something we'll keep an eye out on. That brings them to the target price of 708. The key risks we have to watch out for: higher discounting by competitors. We've been seeing that over the last recent past itself, and perhaps increased scrutiny on the sector by regulators is something we'll keep an eye out on as well, because of the impact that quick commerce has had on a lot of Kirana stores. So that's something we'll watch out for in particular.
But aside of those risks, 1,800 crores of profits by FY27. Yeah. That's their
That's the operating leverage benefit that these companies come up with as well, right? A year ago, Zomato's profit was close to around 2 crores. Now it's going to around 200 crores. So that's the jump that one can expect.
Once things kind of, take off, they really take off. All right, so Swiggy on the radar as well. And so will some of these insurers be because of the life insurance data that came out yesterday. Let's quickly revisit the numbers. Yash.
Well, Surbi, the overall number as far as the industry is concerned, that is LIC plus private players, would look weak. It's come at down about 4%, and that's largely because LIC this time around has dragged the numbers because private life insurance companies in the month of November have grown their premium by about 31%. Speaking about individual players, HDFC Life, its weak growth on a favorable base. November premium growing at just about 13%, 8 months FY25 premium up 14%, November total APE growing by just 3%, and the retail APE growing by 3% as well. ICICI Prudential, very strong growth on a favorable base. November premium growing 1.5 times first 8 months. Premium growing by 35%, November total APE up 2.7 times, November retail APE growing by 28%. Max Life Insurance, it's a good growth for the company in the month of November on a decent base. November premium growing by 21%, first 8 months up 19%, November total APE growing by 25%, retail APE growing by 25% as well. SBI Life Insurance, it's a weak growth on a favorable base. November premium growing by just about 8%, first 8 months premium is down 2%, November total APE growing by 10%, and November retail AP seeing a growth of 9%. Finally, LIC, again, weak growth on a very favorable base. November premium has shrunk by about 27%. First 8 months, a growth of 16%. The total AP in the month of November is down 19% and retail AP down about 12%.
Okay, all right, got it. Thanks very much for that, Yash. Speaking of brokerage notes, just watch out for 2 property stocks. Keep them on your radar as well. There's Godrej Properties, where Jefferies has come out with a buy. Their target is 38.50, which is a good $1,000 ahead of where the stock is right now. So, they're very bullish on the prospects. We'll tell you why in just a bit. The other one is going to be Macrotech. On Macrotech, there is an antique note that's come in. Again, it's a buy call on Macrotech. And the target price has been increased to 18.51. So 2 property stocks where the brokerage notes are fairly optimistic at this point in time. So we're about to get started. Cautiously optimistic, positive bias. Can the bulls pick up the momentum? That's the critical question. And can FMCG stop falling at least? If not, moving higher, can those stocks stop pulling the index on the downside? The bell has gone. Okay. JSW Steel is the winner, about 1% up on that stock. There's BEL, which is reacting well to some recent order win announcements. Grasim, Wipro, Tata Motors, which is hiking prices of some of its models, up about 0.5%. Infosys is contributing on the upside. Apollo Hospitals, Shriram Finance. So you can see there are no clear sectoral moves, at least as of now. It's very disconnected and disjoint. And it's also shifting extremely fast. On the downside, Tech Mahindra, Titan, Axis Bank, TCS. These are some of the names on the way down. SBI Life down about 0.2% as we speak. Let's look at some of the consumer stocks and see what's going on. Very flat now. So like I said, they've at least stopped falling more. I mean, yesterday, that painful reaction to Godrej has played out. Lever is flat. There's some additional selling in Trent, 0.5% down on Trent. Tata Consumers are also on the flat line. That's how it's playing out. So extremely quiet for the large cap space. The Nifty is barely changed, 10 points up.
Well, that's right. Well, let's look at a few stocks then. Greaves Cotton, the stock is bucking the trend because, noted investor Mr. Vijay Kedia went ahead and bought a stake in the company yesterday. It ended at the high point of the day yesterday. And in fact, today as well, it's following in on those gains. I'll be interested to see whether it sustains these gains because currently the stock has very, very large volumes. And yesterday as well, it already had ended higher. ITI continues its good run. The stock is up close to around 35% in a single month. Not making a mistake. Yesterday and today, it's up more than 20%. Today as well, it's higher. Swiggy, swinging it away, because of that brokerage note that Mangalam told us about. So that stock as well doing quite well. Relica is the other one that I'm looking at. There is hopes that, in fact, that Berman open offer gets the green signal. So that explains why that stock is doing quite well. Let's pull up JTL as well. You have Phillip Capital that's come out with a note. Yesterday the stock had ended lower, but now they're expecting more than a 45% upside to JTL. So, they've given their reasons with regard to profitability, volumes, capacity, balance sheet in better shape as well. It's come up drastically from the recent peak, but JTL is a stock maybe that should come up for you on the screen. As of now, we'll wait by up close to around 1%.
All right, we'll keep an eye out on that. A couple of these interesting moves coming by in the jewelry space. We have Kalyan Jewelers, which is slightly under pressure. Titan from the bottom, from the front line end is not doing too well. The smaller jewelry players are doing a lot better. We have something like Thangamal Jewelry, TBZ, all of them, but bucking the trend in the overall weakness that we're seeing in the jewelry space itself. But the stocks that really are on fire this morning, we have IRB Infra. November toll collections rising by 23%. That stock is up around 2.5-3% Metropolis, the stock recovered about 4% from the lows yesterday's trading session on the back of that core diagnostics announcement that has come in. That stock is up around 1.6%. Glenmark as well. The street likes the data that is coming from the trial, the first clinical trial of the cancer drug. So that stock too sitting with a gain of almost 3%. Syngene, there are reports that Biocon will sell about 2% stake via a block deal. at about 825 odd rupees. Wonder whether the deal has happened or not, because stocks surged closer to around 900 rupees out there. BEL, an order win of close to around 634 odd crores, so mild green on that stock. Just keep an eye out on LIC now as well, because this is the first monthly data that has come in ever since the stock's inclusion in F&O, and it's weak growth on a favorable base. So the stock, because it's in the F&O, will perhaps see action on both the long and the short side, and as a result of which the stock down about 0.6%.
I just want to point out some more names. It's a very quiet day for the index, but don't let the index fool you, because there's so much going on at the individual stock level. Just heard us speak with Borosil Renewables. Now that stock is up about 4.5%. And it's had a very sharp increase in the last couple of days since that anti-dumping duty was announced. Wari is putting on more gains, 5% higher. Sagility, which has had a great recent move, again up about 5%. And watch out for some of these textile players. Remember yesterday, Indocount, Trident, Gokuldas, all of them were surging. That trend is intact today as well. Not sure if they're anticipating, some kind of order shifts away from China into India as the US looks at tariffs. But I think that plays well and truly on. Positioning is building ahead of President Trump's inauguration.
Yep, just a word on Swiggy. Swiggy, the stock opened about 5% higher. From there, it's seen a bit of profit taking. Yes. The reason why, I believe that CLSA is bullish on the stock, two things we need to keep an eye out on. One, CLSA believes that, the compounding of revenue for the quick commerce business would be 78% over the next 5 years. That's a tough ask. Secondly, what they're expecting is that, the valuation discount between Zomato and Swiggy would narrow at 22%. That's the lowest that anyone has given at a discount, because the average on the street, when you look at all the brokers that have initiated coverage, would be anywhere between 30 to 35%. So that's something we'll keep an eye out on. And the third part is the risks that they spoke about when it comes to regulatory action and competitive action as well. Yeah. So those are a couple of risks that we need to keep an eye out on Swiggy itself. High expectations, high valuations, and low valuation discount is what they're expecting.
Absolutely, which is why for quick commerce, my biggest watch point is the great Amazon entry. And once we know what pricing and discounting is happening after that, I think then we can have a clearer idea on projections.
Just one stock, Borosil Renewables. Just take a look at that stock. It's up 30% in this month itself, and it's building onto the gains. Clearly, the street likes what the management had to say. They'll be able to sell whatever they make. There could be a price increase that comes about from the Q4 onwards. And the aspiration is to take the standalone business, which is bulk of their margins, towards the mid-20s. Last quarter, it was around 18%. So Borosil Renewable should come up for you on the screen.
Absolutely. So lots of stocks in focus, but the market is absolutely flat. So let's get some perspective going. Yogesh Patil, Chief Investment Officer of Equity at LIC Mutual Fund, is with us. Yogesh, good to have you on the show today. So, let's start with the broader picture. The market has navigated a lot of different worries. Slowdown in earnings, slowdown in consumption, and then, of course, a lot of the global headlines in terms of tariffs and what's happening with interest rates. You tell us, broadly speaking, for the next 1 year or so, do you see the market higher? Do you see it range-bound, or do you think that there is still a possibility of perhaps, the correction opening up again?
Good morning, and thank you very much for hosting me on your channel. See, long-term equity investment is like an infinite game, where you need to accept a lot of positive news, negative news, and developments as well at the same time. But we should not forget, India is the only country which offers a very high growth, and high growth comes with a long digital growth, basically. So India is completely growth-driven story, driven by capex, infrastructure investment, urbanization, decarbonization, and basically, up to some extent, consumption. So it is a long driver, and we do see there might be short-term challenges in near term, maybe 1 or 2 quarters. But in terms of long-term growth, India is still heading for a very good growth, and China Plus One is actually picking up when you talk to corporates. And when you see the new project announcement, the manufacturing almost account for 40 to 45%. It gives a confidence that Indian entrepreneurs actually thinking about China Plus One and India growth story. And the second point, if you see the last 30 years, the kind of capex we've seen in last 30 years, the next 10 years could be very different. And the major growth drivers could be real estate and private and government, not government, basically PSU capex. This almost account for almost 70% of the gross fiscal capital formation. And this could be expecting a roughly higher double-digit growth in these 3 segments, and which will drive the India growth story. And this will reflect in the sectors and in the companies. And beyond a certain point, then consumption will also pick up. As of now, consumption is slow because of a lot of structural changes happened in last 8 years. After demonetization, GST and COVID actually completely broken the legs of informal sector. Today, as per RBI, 64 crores employees in informal and only 6 crores in formal. So slowly, it will take some time to adjust, and a major slowdown in consumers and consumption is basically lack of new buyers. And eventually, someday they will get the new jobs and the new buyers will come for this segment. And then only we see a consistency in growth and the sectors. As of now, the India growth story starts with manufacturing, infrastructure, and then followed by consumption and improving the per capita income. Today, the per capita income is completely skewed towards richer people, maybe 2-3% of the population. And it has to be narrowed down beyond a point. Then only you see a consistent growth and continues. As of now, in initial years, it will be completely driven by capex and basically manufacturing based.
We'll take that point, Yogesh. Just, hold on for a second, because the stock of the moment definitely is Religare. Opened with a mild gain, but now look at the volumes and the stock price move piling up almost 8% closing in on that 300 rupee mark on the stock. In fact, today's high has been above that itself, a 52-week high for Religare itself. The nod coming for the Burmans to purchase additional stake in the company, having the street excited. That's about a 1-month chart, but just look at today. The intraday today itself opened with a mild green tinge, and thereafter volumes and the stock price action kept picking up itself. So that's about Religare. We'll keep an eye out on this story as it develops. Yogesh, coming back to you, you said that, India's per capita income story and consumption story, the Indian economic story continues, but a large beneficiary of that would perhaps be the financial space as well. Not asking specifically about Religare, but what's your view on the financial sector? Would you look at banks, private sector, PSU or NBFCs?
Definitely, India has to grow. Definitely, BFSI segment will follow that. But in BFSI, the competition is currently very high, and there would be winners. We need to choose. But as of now, we are preferring private banks and selected NBFCs. Those who have proper discipline, and any company which is not have proper credit, so normally we are avoiding those companies. So as of now, we are bullish on selected private sector banks and selected NBFCs, but broader theme in BFSI is completely actually disappointing in terms of, let's take MFI and even the regulator has highlighted there is a risk in unsecured loan. To that extent, we are avoiding some of the banks and NBFCs.
Okay, all right. Hi, Yogesh. Good morning and good to see you in. This is Nigel on this side. Well, we're going to have a new RBI governor. The broad consensus is that we'll have continuity. However, the MPC committee, the constitution is going to have large number of new members. How do you see this, playing out, and your initial take?
See, definitely somebody is joining is definitely come with a lot of expectations. So I'm sure that we expect continuity in the reforms and maybe decision makings going forward also. At the best, I can say this one only.
Yogesh, so okay, let's take the the overall portfolio construct. What would be for 2025? What do you see as your top 3 overweight themes or sectors?
Okay, it is a combination of capex and manufacturing. That start with power sector. We are bullish on power sector, industrials, chemicals, up to and IT and selected selected financials. At the same time, we see improvement in rural economy is a combination of higher realization prices, higher output, lower agri cost, and the government's indirect support to the rural economy. So we see these are the segments which could be seen a good growth in FY25.
All right. Just before we again come to you for the last question, keep an eye out on Oracle. It's a listed IT company in India. No direct business relation with the US Oracle, apart from the fact that the US-based Oracle, the international company, is its promoter, holds about 72.6% stake. in the past, we've seen every time there is a big up move in Oracle overseas, we see an impact on the way up in Oracle Financial Services in India as well. But overnight, post-market close, Oracle was down 7% after a weak second quarter performance, and as a result of which we are seeing a bit of a rub-off in the Indian stock as well. It's seen a decent move, but the last couple of days it has seen a decline from the highs itself. So we'll watch out for Oracle, how it performs in today's trading session, and whether this selling is largely sentimental and or if there is any business relation between the two as well. But speaking about Oracle, again, Yogesh, the IT sector, the Nifty IT index has seen some recovery in this month itself. It's up close to around 7%. The best sectoral index that the way it's performed so far as compared to the market. Do you have a view on the IT pack?
Yeah, we are positive in IT. If you see the last 2 years, this sector was struggling, but from last quarter, the commentary of management has changed. From now, no one is talking about the project cancellation or delays. Everyone is looking positive, and the commentaries are very positive. And the selected growth is coming from geographies and a segment like BFSI. But at the same time, we need to adjust all these things with Trump government, how the Trump government behaves. As of now, bottom, basically negative part of the negative bias from IT is actually behind us. But how the Trump administration take this forward. But as of now, sector looks good if you ignore government point of view. But even individual companies are highlighted, they're getting good business and good visibility from their clients.
Okay, all right, got it. Thank you very much for that, Yogesh. Good to have you on the show today. Well, just a quick spotlight on the market before we move on to our next big theme. Market's absolutely flat, not going anywhere, just about 22 points lower on the Nifty now, so there's a tinge of red out there. The big story, we do have a new man coming in and taking charge at Mint Street, and it's going to be Revenue Secretary Sanjay Mehrotra, who will succeed Shaktikanta Das as the RBI governor. Now, he takes over today, and this is going to be a 3-year tenure. In a bit, we'll have experts joining in as well to talk about, of course, the legacy that Mr. Das leaves behind, and more importantly, the task ahead for Mr. Malhotra. Lata is joining in with her editor's take and perspective. So finally, the suspense is over, Lata. It's going to be Mr. Malhotra.
Yes, it is always a suspense because unlike other positions, the governor is not appointed by any committee that news can leak. It's appointed only by the Prime Minister. And so anybody who is guessing is giving you their best guess. They're not giving you any stories. Okay, coming to Sanjay Malhotra himself, the big strength would be that you know how government works. You know the government cash flows, you know their processes, their priorities. The second advantage I think he comes with is he's a computer science graduate from IIT Kanpur, apparently ranked 9th in IIT-G, All India. So clearly very bright in terms of being able to take this new world of fintech, AI and ML. So with, finance getting so closely welded with technology, you have the right man, perhaps. The negative is everyone perceiving that, he would be a government yes man. Not at all borne out by facts. In my own reporting career, Bimal Jalan, Y.V. Reddy, Subba Rao and Shaktikanta Das were all ex-Finance Ministry secretaries, and I think they all led independent innings when they played at Mint Street. I think, when you are in the governor's position, it is your headache when the exchange rate suddenly starts dipping or gets volatile. It's your headache if inflation goes above 6%. It's your headache if yields go up, and therefore you become an RBI man simply because your responsibilities, your KRAs are very clearly defined, and the whole world, the entire financial markets are watching you. So I don't buy this idea of yes man. Even if the governor, if Shaktikanta Das was governor, he would perhaps have cut in February. Actually, a person from Finance Ministry is able to coordinate better because he may have IAS friends in, consumer affairs, in agriculture. So you can talk across and say, potato prices are rising. Are you guys doing anything about it? There can be coordination. I don't see it as negative at all. For me, the only challenge for him is that he will lack a vice captain. Michael Patra, Deputy Governor, absolutely the pillar of RBI's monetary policy thinking, is going to end his term in Jan. And Sanjay Malhotra could do with a bit of hand-holding. I think he will sorely miss it.
Well, that's very interesting and great context to have, Lata. So, as you put it, the captain and the vice captain both are set to change
Retiring together.
in very quick succession.
I think the team only look new, right? Because
yeah, the external members are also new, but the external members come for 48 hours. They don't really fashion. RBI is run every minute when it is intervening in the market, when it is buying bonds or not buying bonds, when it is responding to the day-to-day actions. So that remains unchanged.
The vice captain will be best.
Captain, vice captain changing together is, I think.
So I think it'll have to be a very quick learning curve and sort of a quick handover for Mr. Sanjay Malhotra. Till,
I'm just
Dr.
guessing.
Patra.
This is totally speculative. Maybe they will extend Patra, though sources tell me that looks unlikely. The ad is out.
With so much that Lata knows, I'm wondering, I'm just out of curiosity, did you ever get a call from any of those guys to be, at least in the team, if not the vice captain?
They call me to report on Governor.
She knows exactly what's happening in those corridors. Okay, all right, let's take this discussion forward. We have, two guests also joining in. Aseem Dhruv, who's the managing director and CEO at SBFC Finance, and of course he's no stranger to the Indian financial services world. He's seen it from close quarters for many, many years. And also we have Tamal Bandyopadhyay, consulting editor at Business Standard, who's also seen the ins and outs of the RBI for many decades now. Gentlemen, thank you very much for joining in. First question, Tamal, to you. So, people from North Block eventually making their way to Mint Street, it's not new at all. How do you see this appointment, Mr. Malhotra, coming in as he does when there are high expectations from the RBI to start cutting interest rates and boosting the economy?
No, it's absolutely in sync with the tradition. I mean, there are exceptions, but primarily it's the North Block that at times directly somebody who is in charge of certain things come directly, like Subbarau's case, finance secretary, or the current case, and sometimes like Dr. Jalan or Dr. Reddy, who had been there and coming there. So that's the thing. There is no surprise at all. But the way the things have been done, that's a bit surprise, because Reserve Bank of India governor is something which is extremely critical, not only now but always for Indian economy. So I think it would have been planned a little better, and there is this kind of suspense, so much of drama and so much of speculation. That's probably not the right way of doing it. So that's the only part. Otherwise,
Tamal,
it is it's the tradition. There is. I don't think the government, particularly in the past with one particular governor, they did not, which was an outsider meaning non-IS. I would say even two, they were not very happy. So they have come back. But just one point I want to make, what Lata mentioned is this. The perception of North Block person getting into Mint Road is like Trojan horse. But that perception is not correct at all. Whenever somebody comes to the Reserve Bank of India, the person becomes the RBI person, RBI governor. So RBI independence is so critical, and always the person at the helm is aware of that. So don't think that because of North Block a person has come and everything the government wants, it will be done. That has never been done historically.
No, absolutely. I think central bankers take their position with a lot of responsibility and pride in India and around the world, right? We've seen the same debate play out with the appointment of Mr. Trump and, what happens to the Fed chief there. But it's the same situation that, they act as independent men and women.
I think, there is a lot of unhappiness, as Tamal said, in terms of the manner in which, the nth minute. Tamal, I'm on the government side on this. I think it was done with a lot of thought, and it was a very gracious act. My sense is they did not want to announce that Shaktikanta will not be governor when he is presenting the policy. I mean, there is a little bit of dilution of his authority when he says RBI will ensure that inflation comes down to 4.2 next quarter or the quarter after. He is still full-fledged governor, and they want to announce the next man after he has passed his policy. I thought it was a gracious act. And for me, the fact that they did not announce till the day of the policy confirmed to me the guess that he is not governor. Because if he is governor, they would have announced earlier.
Oh, absolutely.
And to be fair, one of my sources, when I asked him like 8 weeks back, what is this? It's like, we're just about 8 weeks to go and you're not telling us. And he said, you will know on December 9th.
Yeah.
So I think that man was in the know. But anyway, I want Aseem Dhruv to answer something else which the market and investors are terribly worried about. There was a big pushback from DFS and generally the government for RBI's housekeeping activities, banking regulation activities, Tamal well knows that, the expected loss provisions, the extra provisions for infrastructure, the liquidity cover ratio, lots of new rules are sitting there. And obviously, PSU banks are telling the government, give us more time. Do you think, Aseem, that now with the man coming from Mint Street, these could be, banks could get more time and these could be pushed back?
First, I think we should acknowledge, with a standing ovation, the way in which the governor has ended his term, and and as the new governor walks into the pitch, the realities are a little different from what the previous governor had. We are now faced with a slightly slowing economy and inflation, which is still persistent. Now, in terms of regulations. See, regulations is every governor has had focus on a particular activity that was considered critical by the governor. So whether Raghuram Rajan focused on cleanup of banks' balance sheets on the wholesale side, and Mr. Das has focused on two main things. One is cleanup of the balance sheets on all sides, not just wholesale, but the retail side as well as focus on customer fairness score, which was not what the earlier focus was. So to that extent, there's a balancing that has been attempted between the two. And as far as a lot of these ECL and provisions and those goes, it was always the view to move the entire banking system to index. It was just that because nationalized banks wanted more time, they said that NBFC should move on this, while public sector banks and private sector banks will continue. So there, you cannot have a system working on two different ways of reporting of the same business. So eventually, the move to index is a given. Enough time has been given. And I think that it's very likely that the policy will be carried through.
Okay. On the same lines, Mr. Dhruv, something that Governor Das will be remembered for is the way he called a spade a spade. He didn't care which bank it was, who was the promoter, how big the entity was. But if there were deficiencies in service or whether in compliance, we all know with Kotak Mahindra Bank, with Paytm, with so many other institutions, IIFL, on some of the gold financiers as well, the actions were stringent. They were extremely precise. So was the communication. I mean, we got used to the era of very clear, long press releases detailing why someone has been stopped from issuing more cards or why someone cannot onboard more customers through the digital route. On some of these fronts, do you think there will be continuity? Or could there be a slightly different approach, new man bringing in his own approach? What would you expect on the compliance part and the other regulatory issues?
What this governor has brought about a change in overall way in which communication has happened to the industry at large is that the earlier governors used to be a lot more cryptic, a lot more private, and not so expansive in terms of laying out their thoughts. The governor has realized two things. One is that the people have taken penalty as a cost of doing business. That's what's happened in the US as well. And therefore, the instruction is very clear that it's a one strike out. You either follow the law or you'll be called out. So, and if you take an analogy, in a class, you don't mind a strict teacher as long as the teacher is fair. You actually protest to unfairness of teachers, or when you think that you have been singled out while others, bigger guys, have got away with it, which has always been the complaint that we have in a lot of other things in the Indian economy. What this governor has ensured is that nobody has any chance of complaining that they have been singled out because the law has been applied equally to large players as well as small, to foreign players as well as public sector as well as private sector, to banks as well as NBFCs. Every governor has a slightly different style, so I'm sure that it will not be exactly the same way. Some fresh thinking, will definitely evolve both at the MPC level as well as in the way communication happens. But largely in today's day and age of social media, if you are not really out there putting your views up there, you are then opening the field for speculation. So in a way, I hope that the same level of communication is maintained with industry concerned.
Okay. Tamal, I wanted to get back to that pet theme. Patra not there after Jan. New members, new captain and vice captain, as Surabhi put it. And, the first policy is normally seen as from the shadows of finance ministry. Then he becomes an RBI man. So just your thought, will he have a problem with Patra going away? And, how is he likely to tackle the immediate problem of slowing growth and rising inflation?
Yeah, Lata, you are exactly on the ball. But before that, I just want to highlight one thing. If you look at the past few governors, when they came and right now, I think things are comparatively benign compared with that. Like say, Subbarao came and that within a week we had seen the Lehman crisis. After that, Raghuram Rajan tapered tantrum and rupee had a free fall. Next, Raghuram Rajan's successor had this demonetization. Shaktikanta Das, during his tenure, had to face COVID and multiple other things. So right now, the growth inflation dynamics and rupee under pressure, but that's a part of life. I don't think there's any huge, massive crisis looming over India, which Dr. Rajan or Subbarao, even Urjit Patel, they had a much tougher time. And in the 90s, Dr. Jalan. So we don't see that kind of. Yes, we are talking about geopolitics. We are talking about what's happening, Ukraine. You were talking about Trump, etc. But still, we have pretty, barring the second quarter of the current fiscal, we have growth on firm footing. We have inflation, which is being tackled with extreme care. And we have pretty large foreign exchange reserve. So I don't think it's a very tough time as such. Having said that, 5 of the 6 members of MPC will be new in the February meeting, except for one Reserve Bank of India person. 3 MPC members from outside, which for them, December meeting was the first meeting, and Michael Patra and Governor Das would be away. So yes, that's the thing. I mean, how do you? But whatever I heard, Mr. Malhotra is very sharp. His understanding is pretty fine. He is not new to the financial sector. Bankers who had seen him in the DFS as a DFS secretary said that he's cool. He's very sharp with numbers. Apart from his other attributes, like he understands technology and all. But 5 new members at MPC, that's a tough call. So it will be now, we have to wait and watch who replaces Patra. Now, will Patra will get yet another term? I don't think it has ever happened that when you had applied, put up the ad and asked for applications for the job, you reverse it and the person continues.
Right.
I don't think that's going to happen.
Take that point entirely.
So we'll definitely get a new RBI deputy governor. So will they go for an economist?
Right.
That's what. Or that's the point. I think ideally we should have an economist at that point. Right.
All right, we take that point. Tamal, thank you so much for joining in. Thank you, Asim. Thank you, Lata, for taking us through that conversation as well. As Asim pointed out, we need to celebrate the great tenure of Shaktikanta Das and at the same time wish the best to the new governor as well. Tune into CNBC-TV18 for the governor's last press conference, the current governor's last press conference as the RBI governor later this morning at 11:30 a.m. Take a short break. On the other side, we will have with us the management of Patanjali Foods. Sanjeev Asthana, CEO, joins in to discuss the demand slowdown concerns as Godrej Consumers' weak mid-quarter business update came by. Welcome back. You're watching us here on Corporate Radar. The market consolidating with now a positive bias, but one of the stocks on our radar is Patanjali Foods. Remember, FMCG stocks yesterday were under pressure. They felt the demand slowdown as worrying commentary came in from Godrej Consumer, dragged the other FMCG stocks lower as well. The key point from Godrej Consumer's mid-quarter update that may impact all the other FMCG companies is that 20 to 30% rise that they've seen in palm oil prices. The reason why that's important is because it's an important input for a lot of the personal care products like soaps, etc., and also a lot of the food products too. Sanjeev Asthana, who's the CEO of Patanjali Foods, joins us now. Sanjeev, good morning. Good to see you in. A large part of your revenue, of course, comes in from oil, but increasingly you've seen a higher proportion coming in from non-oil business, FMCG, and more so post the acquisition of the home and personal care brands from the parent Patanjali itself. On higher palm oil prices, can you tell us what's the kind of impact that your soaps portfolio has seen in the third quarter so far, and also your other food portfolio, which does use palm oil as raw material?
So high palm oil prices, clearly have a big impact. There's no question about it. Whether it's the soap prices, as we've seen that company after company have taken a price increase. Likewise, palm is a big sort of cost item in the manufacturing of biscuits and confectionery. So it always has an impact. And I think certainly it puts a lot of pressure both on the bottom line as well as the managing of the cost, of palm oil and the other ingredients. That becomes critical. So overall, net, I see that there will be some impact, not that substantial in terms of our own overall portfolio, because it constitutes a critical part of it. But I think it will have some impact, certainly, on the cost of inputs going into the manufacturing of these products.
Could you give us a number? What proportion of your revenue is exposed to palm oil as an input, and how much has your input cost increased by in that portfolio?
So palm has got two dimensions for us. One is that we're the largest sellers of palm oil in the country in our edible oil portfolio itself. So that is some impact in terms of the the demand elasticity on the price elasticity. But in terms of what it goes into the biscuits and the soaps, overall basis, so their contribution is about 20% in case of biscuits, and it's about 20% plus in case of the soaps business. So net on an aggregate basis, it would have an impact of close to about 1,000 crores of palm oil gets used into various businesses for us.
Okay, 1,000 crore of palm oil gets used into various parts of your business. The prices have increased by about 20 to 30%. So 200 to 300 crore has been your overall year-on-year cost increase. But you also said that the offsetting factor of that would be your own palm oil business that you sell through in your edible oil. So what could the benefit out there be? Because, this edible oil cycle has been in your favor. Last quarter, you did a revenue of, volume growth of 4.6% with an EBIT of close to 200 crores. You had guided for an EBIT run rate of around 250 odd crores. Do you think that can increase? What's a sustainable number here and volumes?
So just to clarify that part of 200 crores, most of it is a pass-through basis. So It doesn't have an impact directly into a bottom line, only it has a partial impact. And the second part is that in the edible oil, entirely 100% of the price increase typically tends to get passed on to the consumers and it gets priced in. So it's normally very beneficial for us. If we see the second quarter results and the third quarter, the bump in the prices will actually be beneficial because most of it is, on a pass-through basis, and the value in case you're holding on to the inventory, typically it's a value addition in terms of the P&L, in terms of the business, etc. So this rise in prices for the edible oils is positive. It is less positive in case of the ingredients that we have, but the impact is not fully passed on to the consumer. So there's only a partial impact that we see in the P&L.
All right. Hi, Mr. Asthana. Good morning and good to see you. Ben, let's talk about, the integration of Patanjali's HPC business into your own. How has the scaling up been and what are the targets you have before you?
So very early days. We're just still 2 months into the integration now. 1st of November, we integrated that. It's going on well. Right now, we're just going through the process of integrating, the various elements in terms of teams and distribution, etc. By end of December, we are reasonably confident that it will be fully done and sorted out. So next quarter will be sort of positive, in terms of the overall on a fullness of, scale as it is being planned. And in the first 2 months, it has been pretty much on its course. November was pretty good for us. And December, we're hoping that will also be positive. And I think on a fully matured and fully integrated basis, I think 1st of January, we will start on a full steam.
FY26, what could it do? I think you were looking at a number of around 1,500 crores for the year. So FY26, what should the rough revenue number look like?
So on the HPC business alone, we said that we projected 15% growth rate. So typically, we're expecting about 3,200 crores of revenue in FY26 for the HPC business.
Got it. All right. And also give us a sense of festive demand, Mr. Asthana, for the verticals that you function in, oil as well as FMCG business. How has festive season been? And also your sense with regard to rural as well as urban demand.
So there are two sides to it. Festive season was good, but slightly muted. And in terms of the urban demand, clearly there are challenges. We're seeing some bit of contraction there. The growth rate has been, rather slow. And rural demand is still, while remains positive, but we'll have to see next couple of quarters that how it goes. But overall, slight dip in the FMCG growth rates. We still are maintaining sort of the food business. We'll maintain between 9 to 10% growth. And in the HPC business, we see a lot larger opportunity of 15% growth. So we're pretty much holding on to that projection for us.
So first half of this year, your revenues are at around 15,400 crores, EBITDA at 855 crores with a net profit of 572 crores. Give and take everything, what is the second half of this year looking like? And if you could give us overall projections for FY26 as well.
So certainly better than the first half. It will be premature to give the exact numbers. Certainly better than the first half, and because the lot of products that we have, the categories typically tend to pick up in the winter months. And FY26, our projection very clearly is that, the growth rates in the edible oils of about between 4 and 5%, in foods business about 10%, and the HPC business about 15%. So net, the company should see an, uptick of close to anywhere between 7 to 8% in terms of the overall revenue. And earnings growth of close to about between 8 and 10% is what we anticipate.
Okay. All right, Mr. Asthana, we will leave it on that note for this morning. Thank you very much for joining in and giving us some perspective on the business. Quick check on the market. The market's turned color. Remember, we were talking about this little tinge of red at around 9:30, but now the buyers are here. And actually, banks are seeing good traction all over again. The Bank Nifty is leading the charge on the large cap screen. The gain is about 0.25% on the Bank Nifty. Nifty is also positive. And there are some large cap names from the IT side, like Infosys, which are also contributing. Infosys is up about 1.5%. Shriram Finance is having a great morning, and Shriram Finance has been on a tear last couple of weeks, almost 2% up on that stock. Wipro, HCL Tech, these are the other tech names that are up and about. SBI, I can see. So basically, the twin engines, banks and IT, both look like they could be firing away.
A couple of the consumer discretionary names as well doing extremely well. This morning we have United Breweries, which has moved to the high point of trade. That's doing well. Nykaa too has seen a decent traction. In fact, from its lows, the stock has recovered about 25%. Currently sitting with a gain of almost 4.5% for that stock as well.
Okay, all right. So that's the market. And on that note, the green note, it's a good time to look at the Motilal Oswal Wealth Creation Study. They've come out with their latest one for the year 2024. And to take us through some of the key highlights and the findings, who else but Mr. Ramdev Agrawal right here with us in the studios. Ramdevji, great to have you back on, and thanks for joining in.
Very good morning.
So it's been an interesting year for the market, good year. But
good year, yes.
And I was looking at some of the highlights of the study as well. And this year's study talks about how you can create perhaps a lot of wealth by looking at bruised blue chips. Yes. Bruised blue chips. So very interesting.
How did you like the title?
I really liked it. And then I looked at some of the examples. So I think you picked up stocks like M&M and ICICI Bank. And first I was like, how is M&M a bruised blue chip? It's one of the best performing stocks this year. But I realized you're talking over a longer term time frame. How from being a bruised blue chip, this is a company that's become such a huge wealth creator.
No, it's a robust blue chip now.
It's a robust blue, bruised to robust. Yes. So why don't you tell us more about the thought process and the thesis
here? The first thing is that everybody would like to see in the portfolio beautiful, all the robust blue chips in their portfolio. Yeah. But all the robust blue chips are very expensive to buy. And typically if you buy at those fancy prices, the returns are very at market level or something like that. So how do you make above market return while having blue chips in the portfolio. So the best time to buy is when they are bruised.
Yes.
Bruised means they are bit of scratch. I mean, they've not lost the blue chip status, but they are in bit of trouble. Maybe because of their own doing, or external forces, or competition, or misallocation of capital. Something. I mean, few things come together and the companies are in trouble. And good thing is, if you think that how come these kind of companies can be in trouble? But if you do the data, then you realize every year 40 companies, they get into trouble. 40 blue chips. So first thing we said, actually we started this study, we wanted to understand turnarounds. How to make money out of turnarounds, like Suzlon and Mahindra & Mahindra, JSPL. There were tons of money. So how to get this? So you've got to have good framework. In market, if you have a framework, then everything is sorted. Whenever the opportunity comes, you can use the framework and go about it.
Let me talk about one company, sir. You know, but when you talk about bruised blue chips, let's talk about Asian Paints. You know,
we'll come to that. No, it's just getting bruised right now. So we'll come to that. First is about the framework. Framework, how to pick bruised blue chips. So first thing is to define blue chips. The world talks about blue chip, but where is the definition of blue chip?
Nowhere.
Certain market cap, certain...
So this is where because if you want to do a study, you got to have some hang of the numbers. So that's where we try to define the definition of blue chips. So definition, when we said, I mean, I was very clear. Blue chip definition is like 20% average ROE for 10 years.
Got it.
Okay, so that gives about 1/3 of the 250 companies, top 50 companies as the blue chips. Then the guys, they said, say Reliance or a lot of big companies, they don't have 20% ROE for 10 years. So are they not blue chips? Of course they are the blue chips. So we said Nifty, any Nifty inclusion is also blue chip. So first 50 is the whatever Nifty companies, and then on top of it, any company which has more than 20% average ROE for 10 years. Very stringent note, I can tell you this. So we came across about 107 companies in total. So then we started, I said, now we are settled with the 107 companies to study. Then we looked around. When you do data for every 5 years, you come across something like 80 to 100 companies every year. So out of 250, about 1/3 is always, or a little more than 1/3, maybe 40% is always a blue chip status. So, and actually in Nifty, about 20 companies, 22 companies are blue chips. So it is very tough to beat Nifty in the longer run because they're all blue chips.
So I have a question now, since we're talking about the framework, right? Bruised, to identify what is a bruised blue chip that can turn around, right? Because there could be companies where certain, very big things have changed, that maybe they're going to lose their blue chip status.
No,
we don't know.
This is where the blue chip comes. The blue chip, see, first thing is what is bruised. So one of the book we read, so there he said 50% from all-time high, or say last 5 years high. So that gives some kind of number. So in last 5-7 years, the companies, whatever high they have shown, if somebody has shown $1,000 and now it is horrible at 450-500. The moment it breaks 50% from that high, you are in a watch list. No, you are not decided to buy. It is in watch list. Please don't mistake. So you are in watch list. Now, why blue chips only? See, any company can fall. The companies which are not a blue chip, small company, they can also fall, but they don't have the competitive edge. See, it's like a Rishabh Pant getting injured. He met with a car accident. 2 years he was out. He went to Europe and all, and then he came back as again a captain, roaring. So this is what the blue chips character is. When they lose the status, like Virat Kohli can be down for say 2 or 3 matches, but when he comes back, he hits century.
Okay, how do you identify that this blue chip which has become bruised, what are the characteristics that this is going to be the turnaround story?
So first thing is that it is a blue chip. It is erstwhile blue chip, confirmed blue chip. Now, so they have a characteristic of the competence to come back. Then, see, you can't do it only statistically. Then you got to have foresight that this company is going to survive and prosper. That's a call which is more of an art than any kind of a number.
Now you've created a watch list. Watch lists are blue chips which have fallen 50% from the top. The second part of the process is start to buy, awaiting buying triggers. So at what point, because the statistical analysis says that from the lows these stocks have moved this much. Very difficult, it better than everyone else to
so that is from the point of maximum pessimism. Okay.
How do you define that?
Yes. Point of maximum is lows. I mean,
Nobody's willing to buy in the market.
Yeah. So
but who's to say that a stock which has fallen 50% won't fall a little more than that?
No, it
How
will
do you
fall.
start buying?
It will fall. Particularly if you buy, definitely will fall.
Yes.
Because bottoms are...
The honest truth in life in the market.
So bottoms are made for fools and liars. You will never get it.
Exactly.
Because bottoms are always, when you look back, then you realize that was the bottom.
Exactly.
So you have to buy when you are comfortable. See, like, say Mahindra & Mahindra. It was a, say, 600 rupees stock, 570, 580 rupees stock. After it became 280, and when they sold Sangyong, the major trouble is sorted.
Yeah.
Right.
In fact, we didn't believe that, is the Sangyong actually gone? You know, there's no liability left. They said, yes, it is gone. But nobody believed. I mean, for 1 year, nobody believed that it is gone. We thought the roundabout was the loss. But nothing, they cleaned it up completely. And then, you know, from the 300 rupees, see, in buying blue chip, the fun is that blue chips do come back to their old high. So there is asymmetric payoff. So if 100 rupees stock has come down to 25, the 3x is almost guaranteed if you buy it right. So, but the 3x happens in 3 years, which is 40-45% return, you know, or 50% return. So this is what asymmetric payoff is an opportunity.
Okay, so now let's go back to the question Nigel was asking you, right?
Yeah,
Let's
I'll ask it.
You please. Yeah, that's the
Is
Asian
it
Paints
bruised enough?
example. Yeah.
Asian Paints, it's down 30-35%, I think, so from the recent people.
yes,
Got the number right?
Yeah, 35%.
Approximately.
Yes.
So it's not bruised enough?
It is bruised, but it is getting bruised seriously.
Right.
See, what is seriously bruised? If it is not bruised 50%, then it's like a correction. It will go back. It doesn't come in my list. My, you know, kind of a bruised blue chip. Confirmed bruised is like after 50%. So, but I don't wish anything like that.
Yeah.
You know, I want the stock to go back to 3,500 immediately. But if by chance it falls below, then it becomes very intense. See, because there is an intense war. See, there is a consumer slowdown for sure. Okay. I mean, I don't know why nobody's painting the houses, but there is a slowdown in the consumption of paints somehow. And in that, then your builders, they want to create a niche for themselves. They have put up 10,000 crores plant, 4-5 plants they've already started. So there is a massive push to garner market share. So obviously it is going to come from, in a slowing, if it is market is growing at 30%, nobody realizes the new guy comes in and takes it to 3%. But in a slowing market, if you want to take 4-5%, I think it hurts the existing guys. And if the existing guys are not willing to give, then there is a price war or discount war. And that takes away the profitability of the industry. Like what Jio did to the entire telecom industry. In fact, where there is a very intense competitive war, typically the industry profitability takes a dip significantly, or it goes to the level of literally zero profit.
Got it.
While the war is on. You know, you remember PNG and Lever. So those are the things, I mean, I don't know whether it will be as bloody or not, but markets are very skeptical. And see, markets live by the quarter. First quarter result is bad. A lot of people, they come and buy. Then what happens is, the guys who have bought, the second quarter is also bad. Because it is not a 1 quarter war. It might be a few years. So in second quarter, when the result is bad, the first quarter, the guys who have bought, they come to sell. So like that, the spiral keeps building up.
Would it then make sense to add another variable to this definition of bruised, apart from just price, add time as well? Because Asian Paints down 30% from highs for 3 years would automatically mean it's down 50% from the perceived highs because of the time factor. Would that make sense?
We have kept it simple. You can see, these are all the ways to think. How you want to think, I mean, how you want to add up your way of looking at things.
Yes.
See, we are not looking at underperformance. Underperformance, if you look at it, then it might be 60-70%.
Exactly.
Because market is up 50% and you are down 30%.
Yes.
So, but then we have not put that, but it must come somewhere in the picture.
But at current reckoning, would you be a little bit positive from these prices on Asian Paints?
No, I said
not yet.
Till 50% done. See, what used to happen was earlier, if any company is in trouble, I used to think, thank God I don't have it. You know, and don't bother about it. Now I see opportunity in them.
Got it.
That's
a very
the basic thing.
Mindset shift.
Yeah, so we wanted to buy all the healthy companies, go QGLP, all the quality and growth. Now, bruised quality and growth.
How interesting. I mean, what a different way of looking at things. But also, what's on the watch list now? Which are the top bruised companies? So
we have given 11 companies.
Which are top of mind for you in terms of the watch list?
So 2-3 Adani companies are there in the list. they have been bruised quite deeply, some of them 70-80%. Then you have Asian Paint, then even our dear Avenue Supermart is down about 30-35%. Then because there is again, massive competition coming from Zepto, Blinkit and Zomato. So that is hurting, at the margin, not really, but at the margin in terms of growth.
So let me ask you, let's take Avenue as an example, just to understand how the study is to be applied. Hectic competition, numbers have not been good, there's disruption playing out in the distribution channels. But it's a pedigreed stock, pedigreed management, quality, governance, all of it going for it. So how do you decide whether the time has come to say yes to this blue?
I'll start applying my mind. Only after 50% correction.
Okay, so the starting point is 50%.
See, conditions will be very different, I can tell you this. But I remember at 70 rupees, telco looked untouchable. Rakesh, before just passing away, he bought tons of it, like 4, 5, 6 crore shares.
Okay.
Yeah. So he was a master of the game. He did Lupin, he did Titan, he did JSPL. I don't know how much he bought, but Telco and Indian Hotel were the last few months before he went. So what I'm saying is he was the master of the game. He always used to tell me, Ramdev, I'm buying this. But I never could understand why he's buying. Now I can understand. But it's too late.
Beautiful. Beautiful.
Just the perception change, not a question, is that earlier when a stock fell, you said you were feared. Now you're looking at it as a shopper. A lot of the people who go shopping, they be like, oh, there's a 30% discount on this shirt, 40% discount on these shoes. You say, oh, these are blue chip stocks, they have 30-40% discount, 50%. Unless there's a 50% off, Ramdev is not going to the shop.
Yes. I said cricket analogy.
Yes.
If Virat Kohli is injured, it doesn't mean that he is no more a blue chip batsman. He always, because whenever you give him the bat, he can hit a century. That opportunity is there.
Mr. Agarwal, I'm just hoping in the third test match all this comes through. We desperately require the boys need to come in there and perform.
Because it is one up, one down. See, they cleaned up Australians on the first match. Second match, they got cleaned. Third match, they'll come back again.
Exactly. That's what we're hoping for. Finally, before we let you go, we're done with the cricket. How are you reading the economy? Suddenly these FMCG guys are coming out with these shockers. So staples are struggling, but discretionary is doing well. Again, but if I look at the auto space, two-wheelers are doing well, and suddenly there is some inventory build-up in passenger vehicles. So just a comment on that before we wind up.
So again, in this study, we have this market outlook. So if you see, the corporate earnings started climbing up from 2020 onwards. So there is some fundamental shift in the way Indian economy is being run. Till about 2020, it was dominated by consumption. Okay, so consumption stock went to the roof, 100p, 80p, that became the norm, irrespective of the growth and all. They were fantastic franchises, but it was overvalued. Then comes the capital goods. Suddenly the whole tide turned and the government expenditure from 3% to 6% fiscal deficit, the government started pumping all the government expenditure. And hence all the capital goods companies, defense, capital goods, railway and all sort of L&T and all. So that's the theme. That theme is not going to change. And I think new governor has come. I think he's the guy who comes from Delhi. He understands everything about the tax collections and all. And I'm sure the credit flow is slowing down and hence the GDP growth rate and the tax collection. So his job is going to be quite intense. I think today we'll listen first time.
At 11:30, we'll have Governor Das for sure.
Yes.
And let's see if we get any kind of statements from the new governor as well.
Of course, he'll be very happy to make statements.
So, sir, finally, and it's been a great year for the markets. It's been volatile, up and down, but I think investors overall will be happy.
Next year will be fantastic year because I see. Last year we got $60 billion from DI. Okay, foreigners, they were absent. I'm just saying one up, one down. Now next year should be a positive year for FI. If FI is even $20-25 billion by chance, I think you will have a party.
Okay.
Big party.
In fact, we'll have the DI number today. Again, the mutual fund numbers are coming out today.
One way.
One up, one down. India's coming back in the third test and FIs are coming back in 2025.
Both up next year in 2025. Thank you very much, Mr. Agarwal. Always a pleasure. Thank you for educating us and for having been with us through so many years, including 2024. Wish you and your teams a very, very happy new year.
Thank you. Thank you.
All right. Well, on that note, we do have to take a very quick break. Come back on the other side. We'll have Mitesh Thakkar joining in, get some quick technical ideas going for the market. Welcome back. Well, let's quickly look at some of the trades you can perhaps work with this morning. The markets managed to look at a bit of a buy on the dip. We've got Mitesh back with us. Mitesh, any ideas or calls on the index and, of course, individual stocks as well?
Good morning again. I think on the index, my view is still positive. But as I said, I think, we'll try to buy it near the lower end of the range. That continues. But Nifty IT is the index which clearly has some strong momentum today. And that's where the action could be. I would recommend a buy on Infosys with a stop at 1930. Disclaimer, I have some call options positions, so there's vested interest. But this is breaking into all-time or fresh highs. And as long as 1930 doesn't get taken away, good chance that Infosys in the next few weeks could head towards 2020, 2025 to begin with, that being the first target. 2060, 2080 is the zone which I'm actually looking at. Look for the stock to hit. So that's one. The other one is L&T Finance. That's another stock which has given a good breakout today. So L&T Finance, I would recommend buying. Keep a stop just below levels of 147.5. Look for target of 157.
Okay. All right, Mitesh, got that. Thanks very much for the calls. We'll touch base again through the course of the day. Right now, a quick break. But on the other side, Lata comes back with our special segment, Market Masters. Today, she's in conversation with Bhanu Baveja of UBS Investment Bank to talk about the market outlook for India in 2025.